When we talk about the year 2026, I want to be crystal clear about something. This isn't about making a prediction. It's not about gazing into a crystal ball or claiming to know the future. This is about recognizing patterns. It's about looking at history and understanding that major economic shifts, the kind that redefine a generation, almost never happen out of the blue. They don't just appear overnight. Instead, they are preceded by a series of quiet, almost invisible signals. And the signals we're seeing today, right now, bear an uncanny resemblance to a process that has played out time and time again throughout history. Let's start with the first and most obvious signal: debt. Global debt levels are soaring to heights that are truly unprecedented. We're not just talking about government debt, which gets all the headlines. We're talking about a trifecta of debt. Governments are borrowing, corporations are borrowing, and households are borrowing, all at the same time, all on a massive scale. When everyone in the system is relying on borrowed money to keep things going, that's not a sign of fundamental strength. It's a sign that the system is stretching, that it's buying itself time. It's like a runner fueling themselves with energy drinks instead of real nutrition. You can keep going for a while, but eventually the crash is inevitable. History is littered with examples of economies that piled on debt, believing they were fueling growth, only to find they were building a house of cards. This level of synchronized global indebtedness is a massive red flag, one that historians of finance will recognize immediately. Now let's move to the second piece of this puzzle, which is closely related to the first. It's what I call the breakdown of the interest-growth balance. For a healthy economy to function, economic growth should ideally outpace the cost of its debt. Think about it on a personal level. If your salary is growing faster than the interest on your loans, you're in a good position. You're building wealth. But what happens when that flips? What happens when you need to take on more debt just to stand still or to generate even a tiny bit of growth? That's the situation we are increasingly finding ourselves in on a global scale. Economic growth is becoming more and more dependent on the constant injection of new debt. Historically, this kind of imbalance only resolves in one of two ways. The first is a long, slow, painful process where the value of that debt is gradually eroded away, often through inflation, a process known as deleveraging. The second is much faster and far more disruptive, a forced reset of the system, a crisis. There really isn't a third option where things just carry on like this forever. The laws of economic gravity eventually take hold. This brings me to the third, and in my opinion, the most critical signal of all. It's the growing, yawning gap between perception and reality. If you turn on the financial news or look at the headline stock market indices, what do you see? You see a narrative of control, of stability. You hear central bankers talk about soft landings and resilient economies. The markets on the surface seem to project an image of calm. It's business as usual. But if you look beneath that surface, if you dig into the plumbing of the financial system, a very different picture emerges. You see that liquidity, the lifeblood of the markets, is quietly tightening. You see risk quietly accumulating in forgotten corners of the system, hidden away in complex financial products or off-balance sheet entities. This period has a name in financial history. It's called the hidden phase. It's that deceptive calm before the storm. We saw this in the years leading up to the great crash of 1929. We saw it in the years before the global financial crisis of 2008, and we saw it in Japan before the beginning of its lost decade. In all of these cases, on the surface, everything seemed to be working perfectly. Stocks were up, confidence was high, and the consensus view was that the good times were here to stay. Everything worked, until one day it didn't. This disconnect between the rosy public narrative and the deteriorating underlying fundamentals is perhaps the most dangerous signal of all, because it breeds complacency. It lulls everyone into a false sense of security, right at the moment when they should be the most vigilant. So why focus on 2026? Why that specific year? It's not because I expect some single dramatic event to happen on January 1st of that year. That's not how these things work. The reason 2026 is emerging as a focal point is because it represents a potential convergence. It's the point in time where these multiple pressures, the extreme debt, the broken growth model, and the reality perception gap, could all come to a head and unwind at the same time. Think of it like stacking weights on a fragile table. One weight might be fine, a second might make it groan, a third might make it wobble, but at some point you add one more small weight, and the entire structure doesn't just bend, it shatters. The danger isn't any single one of these pressures. The danger is their interaction, their combined force hitting the system all at once. Again, I have to stress this. This is not a prophecy. This is a probability analysis. It's about looking at the historical data and saying the conditions we see today have, in the past, led to this type of outcome with a certain degree of frequency. It's about risk management, not fortune telling. And one of the most profound lessons history teaches us is about when systems actually break. They rarely break when everyone agrees they are weak. When everyone is pessimistic, they're also cautious. They've already prepared for the worst. No, systems break when they appear to be at their strongest. They break when confidence is at its peak, when complacency is widespread, and when the belief in permanent stability is at its highest. That is the moment of maximum vulnerability. So as we look ahead, the real question we should be asking ourselves isn't, will something happen? A narrow focus on predicting a specific event on a specific day is a fool's errand. The world is too complex for that. The truly important question, the one that every single one of us should be considering, is this. If something happens, are we ready? Are we prepared, not just financially, but mentally, for a world that might look very different from the one we've grown accustomed to? Have we built resilience into our own lives, our families, and our communities? Because in the end, we can't control the great cycles of history, but we can control how we prepare for them. And preparation begins with understanding the patterns that are unfolding right in front of us. Thank you so much for watching. If this perspective resonated with you, please consider liking this video and subscribing to the channel for more deep dives into the patterns shaping our world. I'd love to hear your thoughts in the comments below. Stay curious and stay prepared.